Hey, this is Tim, licensed loan officer. On this video, we're going to talk about how to boost your credit fast for a mortgage. Thank you so much for watching. Before I get into the video topic, I want to let you know what this channel is about. On this channel, we talk about mortgages, like first-time home buyers. We talk about investment properties, leveling up, as in budgeting, having good credit, and all types of things like that.
Hell yeah!
Also, if you like to request a topic or a video, comment below. I would love to hear from you. I would love to make a video for you. So just drop me a comment, and love to do that for you. So I'm going to talk about credit and how to boost your credit for a mortgage, okay? I'm going to give you the ins and out. I am a licensed loan officer. I've been a loan officer for a little over 5 years now, and I'm going to tell you basically what you need to know. All right, so buckle up. Let's go. All right. How to boost your credit quickly for a mortgage. So that's what we're going to talk about. And I want to show you this. Now, these are called brackets. Now, I don't know if you can see it here. Can I? Oh, I can zoom in. That's cool. Okay, so I can zoom in a little bit. So these are brackets, and this is how the mortgage world works. It's in brackets. And I'll explain a little bit more why I'm showing you this. So anything under 620, that's basically what you get. You're under 620. But these other ones, like if you're between a 620 and 639, that's a bracket. Then a 640 to 659, that's a bracket. A 660 to 679, a bracket. 680 to 699. So that's how it works. And I want to say this because some clients say, oh, my credit went down like 5 points or 6 points. It really doesn't affect your credit because, like I said, there's brackets. A lot of times having your credit ran, it does not take it down to that lower bracket. Now, this is actually called low-level pricing. Low-level pricing is like for a conventional mortgage. It's for a DSCR loan. Pretty much anything that's not government-backed loan. So a government-backed loan will be like a FHA or VA. They do something called flat pricing. Flat pricing means that they don't really have these brackets as much. Now, if you're under, 620, yes. But generally speaking, if you're over 620, they just kind of have like a flat pricing. With these other ones, it basically takes your credit score, your down payment, your property type, and it spits out a pricing. So if you was to buy a single family home, you get a little bit better pricing than for a condo. But for this video's sake, focus on these brackets. So if you're at a 699, then you probably want to get to a 700. If you're right around 630, then you might be able to get 10 points to get to a 640. But if you're already at a 620, sometimes it's going to be very difficult to go from 620 to 640. So just understand where you are. Now, you also want to consider this. Let me go to the next slide here. Is that there's 3 different agencies. There's Equifax, there's Experian, and TransUnion. So the way we do it in the mortgage world, we take your middle credit score. So we don't take the highest and we don't take the low, we take the middle. So it can be a little confusing where you say, okay, I'll check my credit and my TransUnion is 6 something and this is 6 something. I don't know what this is. So they're going to take all 3. Now you can go to annual credit report and request one from each 3. But here's the caveat. They don't give you the credit score. See, you have to pay for that. So what I do is just kind of use Credit Karma. And what you do with Credit Karma is you just subtract maybe 10, 15 points. And that's what your FICO is. So most lenders are going to use something called a FICO. And a FICO is a different grading system than what lenders use, which is a FICO. So they use a little bit of different grading systems to determine your credit score. But just remember, you have 3 credit scores, and the lender is going to use the middle. But with Credit Karma, you do get 2, and that's a good ballpark. So with those 2 on Credit Karma, I think it gives you TransUnion and I think it's Experian, so you can kind of get a ballpark. But don't go crazy. The main thing I want you to focus on is that after you maybe subtract 10, 15 points, whatever, are you at the borderline of one of these brackets? Because if you're at the borderline of one of these over here, 639, 659, then it's probably worth it to do a little bit of work. But if you're a little bit lower on this side, I would just stay where you are, okay? Now, let's get into some ways you can boost your credit fast, okay? Let's talk about that. And the number one way is just to reduce your credit balances.
Yes.
A lot of times, credit balance have brackets too. So if you're under 10% of your credit limit or your available credit, you get a boost. It's recommended to be under 30%. And if you're under 50%, you get a boost. If you're over 50%, then you want to get under 50%. If you're over 30%, get under 30%. And if you can, try to get under 10%. People that I've seen that have great credit, it usually took them time and over years where they have high limits and they only use their credit a little bit where it really helps them. So that's the first way. See if you can reduce your balances. And, oh, yep, this is exactly what I was going to tell you. This utilization, see? I actually put it here. So excellent is under 10%. Good is between 10 and 30. Fair is 30 to 31 to 50. High is 51 to 70. Very high is 71. So understand these brackets. And the more you know about credit, the better you'll do. Just going to pay off a bunch of debt doesn't really help you unless you meet one of these brackets. So if you was to pay off a bunch of debt at 10%, you just have a zero balance. You don't really get a bump for that. But if you're over 30 and you go, over 50 and you go to 30, you get a bump. So just understanding how credit works really helps you. So that's the first way. Let's go to the next slide here. Now, you do want to avoid opening new accounts, especially if you're looking to get pre-approved. You're going to have your credit ran by a lender. You're applying for thousands of dollars to buy a home. So at this time, don't open up any new accounts. This is the time to maybe do a few things to improve your credit, not to apply for any new credit. The only inquiry you're going to want is that mortgage inquiry when the lender runs your credit when you apply. But don't open any new accounts during the process, before the process. So if you're looking to buy a house, this will hurt you, not help you. The lender will ask for a credit explanation because they're going to know why did you apply for credit. It's standard the last 90 days. They want to know about inquiries. Let's look at the next one here. And this is very important. You don't want to close any accounts. So you want to pay on accounts, but don't close any accounts. Opening and closing accounts do impact your credit. This is a really good way if you do have a family member, a good friend, someone that has really good credit. They can add you as an authorized user. And an authorized user just means that they call their credit card company, they give them your date of birth and social, and that credit card company puts you on that account. You actually get a card, but you could tell them you don't even want the card. You just want to piggyback their credit. Because the way the credit cards look at it is that if I have good credit and I'm cool and I add you on my account, now you're cool and you're going to start getting some credit for that. So that's a quick, easy, free way to bump credit, authorized user. Now, not everybody knows someone that can do that for them, but that's a good and easy way to do it. And payment history is critical. You know, having good payment history, what lenders are looking for, they want to make sure you have credit. They want to make sure you can pay your mortgage. Experian Boost. Now, Experian Boost is cool and it's free, but it only works for Experian. And the way that works is that you go to Experian.com, you create a free account, and then you log in with your bank credentials. And after you log in, it scans your bank account. It looks for like a cell phone bill or Netflix or something like that. You give them permission to track that. And as long as you pay that on time, they give you a 10-point boost. And I believe after the first payment, it's a 10-point boost. But remember, that's only with Experian. But that may help because remember, there's 3 credit bureaus. And if these 2 are good and you get a boost with this one, that may boost your average or your middle credit score. So disputing errors can work, but here's a problem with that. When you apply for a mortgage, you can't have any disputes. So this is something you would probably do before you get into the mortgage process, before you even think about. But if you look into dispute things, don't do it if you're going to apply for a mortgage, because a mortgage company will have you remove those disputes. Deal with collection accounts. Now, this may not boost your credit, but it helps you qualify for a mortgage, because if you have collections, especially over $2,000, the lender is going to ask, like, what's going on. But if you have a payment plan set up or something in writing that you're negotiating with them, then that will not so much help your credit, but help you qualify for the mortgage. Thank you so much for watching. I hope this video helped. I went over some easy ways to boost your credit and kind of went over the brackets and how credit works as it relates to qualifying for a mortgage. If you got questions, let me know. Remember, if you're new to this channel and you'd like to see more, please like, share, subscribe. I love it. Give me a thumb up. And if you have questions, drop me a comment below. I will check those comments. All right. Thank you so much for watching. And again, I'll see you again on the next video. Thanks.